I think, the number one kind of thing that pops out here for me is, and I think everyone can understand this pretty easily, is the tax situation. Okay. And what revolves around this tax situation is you've got guidelines and codes and contribution limits and a ton of let's just say positive things that are positive really assets and accounts that the IRS kind of gives everyone either planning for retirement or even in retirement to use efficiently for your tax output and what you're paying in taxes. And I think the number one thing I love doing, when I sit down with a client is whether they're young or they're older. If they're older and they're really planning the taxes and planning the distribution side of things, understanding how to efficiently take money out with really, benefiting off of the taxes, the tax advantages that you have in those accounts. On the other side of things, right, when you're planning, and for those out there that hey, David, what do I do? How do I maximize my ability to really save on taxes down the road? I think that there's a lot of different theories out there, but every single year, every single decade, we come out with new things, right? You've got, the backdoor Roth for high income earners. And I myself actually go into that route. I think it's really a cool route to take when you're younger. So you younger folks out there, if you have any questions about that, please give me a call. Again, my phone number on here, this comes right to me. So if you're young and you're looking at things with Roth backdoors or Roth conversions, I can definitely help you out with that. Call me at 850-565-1705. Again, that's 850-565-1705. Now, getting kind of to the next thing, I think, obviously taxes are a big issue, but what it kind of brings up, and I think this is something huge that we're dealing with right now with the big wealth transfer, is not putting the funds in the right accounts. Okay. So yes, taxes are a big problem, but what revolves around taxes, it's really the accounts that you're putting your assets or your funds in. It's really not about what you're investing in. Obviously that's going to determine growth. That's going to determine, how risky you are, things like that. But the type of accounts, whether it's a brokerage account, IRA, 401k, 403b, right? You've got Roths, you've got a lot of different things. These are what's going to really help, I think, understand and what people don't have a good knowledge on. Okay. And this is where I come in as an advisor and really help you understand what's going to really benefit you in your specific approach, because not everyone's going to be the same approach. Some people are going to be in different tax brackets. Some people are going to have different ways or different thought processes when they retire, whether you're going to have pensions, you're going to have cash flow. You might have a little bit of real estate that you're making some income off of, right? So all these things kind of tie into, right, each segment of the retirement portfolio. And, it's funny, I talked to my aunt and my cousin that they run a huge accounting firm up in Maryland, and shout out to them. I call them probably once a week talking about different situations and what they would do with certain clients, because it is nice to have that, that accounting firm on your side for your clients. I think one of the biggest problems right now, and for you guys out there, if you're hearing me, right, and you're planning to retire, understand, right, the accounts that you have were meant specifically for a reason. Okay. So everyone out there, if you're saying, oh, well, I bought stock at this age, or I've had mutual funds for this long and this amount in this account, each account's meant for something different. Okay. When you go take a test or you go online and you Google what these accounts are made for, they're all different accounts and they're made for different things. For instance, 401ks are meant for employer contributions as well as employee contributions, right? IRAs don't work like that. IRAs are obviously what we contribute, right? So I can't tell you, Jim, how many times I walk into a client's house and they're like, oh, I've got a 401k. It's not a 401k anymore. It's a rollover IRA, right? So the terminology that people are thinking, they're different accounts. They work different ways. Yes, they might have similarities, right? But I think understanding why 401ks are a big part, or 403bs are a big part of the retirement industry, obviously is because of that, that employer contribution that actually matches what you're putting in. That's not your own take home income. That's not your own earned income going in there. IRAs aren't like that, right? IRAs are, hey, I'm going to self contribute and I'm going to hit that maximum amount or not. And guess what? I'm going to let it kind of tax defer down the road. One thing I really want to kind of stress on here, and this is where I think that a lot of you guys out there are probably hearing a lot about it. The Roth IRA is something that I think that everyone and in every single age should at least explore. Okay. And there's reasons for this. Obviously, the IRS only gives you a certain amount that you can actually put in there for a contribution limit. And I want you guys to understand why they do that. Okay. And why they do that is because if they let you put more than that in there, right, the odds are you're going to make a lot more tax-free money. Okay. Right. And the IRS is not going to get their money anymore. Okay. So I think whether you're fresh into retirement or whether you're, 10 years from retirement, whether you're, maybe you're saving some for the kids, right? You've got to understand the advantages of the Roth and how to transition to a Roth and do it efficiently. I've seen a lot of people out there transitioning to a Roth at 35% tax bracket. It just makes no sense. I'm sorry to anybody out there, that has done it. Again, we can meet, we can talk about it. I can show you the numbers and I can go on the whiteboard all day long. But if I had to give any advice about that Roth side, there are ways that you can really take advantage of this for either inheritance or for yourself down the road in retirement. And I'm talking if you're younger than 60, you really want to hop on this train. And why I say that is because there is a tax deferral / tax-free mechanism that I think that is super, super important when it comes down to growth, but also compounding in the factor of, hey, I can take what I've already compounded and now transition that into a Roth. And now I can compound on my tax-free money, right? So these things I think are a big, big talk about when we talk about, hey, what are people missing? Okay. So first taxes, obviously, then we go into Roth IRA. And again, if anybody has a question about Roth conversions, okay, looking at a Roth, maybe can I do a Roth or is there still time? Please give me a call. I'd love to sit down. We'll sit down. Again, it's a free appointment. Okay. I don't charge for any appointment at all. We'll sit down, go over your scenario and see what best benefits you. Honestly, a lot of the times it just depends on what your certain scenario is. Okay. So that number for me, obviously, is 850-565-1705. Again, that's 850-565-1705.
And if you like that video, be sure to click the subscribe button and hit the notifications bell for weekly content just like this. And for more, click the video on your screen.